And I remember standing in Chipotle in 2014. It was just me and one staff member. And we were doing probably 18 loans a month. As I'm standing in Chipotle, it was just hot outside. I had to wait outside to get in. Finally got in. I'm standing in this massive line. And as I'm bored waiting to get to my point to order, I started counting heads behind the counter. And I realized there was 11 people there working at Chipotle to be efficient in burrito construction. I'm like, if they need 11 people to be efficient in burrito construction, what do I have to be and have to do real estate investment finance? So as I'm staring at that, I got to thinking, what if I put a person doing here and here? So I built out a process based upon Chipotle's method of building burritos.
Just standing in line.
So that's what I have now. I have 22 people on my staff that we built out a system very, 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 very similar to that.
All right, man. So you got your 22 people. So let's just go into some of the basics of like, an Azreia member, someone maybe newer to real estate investing or experience, just like, or you'll start with the newer person. Just they might not think they can get a loan, right? Maybe they don't have steady income or good credit. I don't know. So like, just give us an idea of what does a newer investor have to do to be prepared to buy an investment property?
So a very, very good friend of mine, Joel Moyes, he's actually one of the owners of Realty Executives here. We're business partners in many other things. Interesting. We don't do business together in the real estate side. But what he loves to quote, and I don't know where this quote come from, but it's the start that stops most people.
Okay.
So think about that for a minute. It's the start that stops most people. Real estate investors have to just start. If you want to become a real estate investor, if you hear that majority of millionaires are made in real estate than any other way, you got to start. What is the best place to start? Is to just call me. Right. Seriously, just call me, because you got to figure out how you're going to acquire real estate. You can look at all the real estate you want, but if you need to figure out financially how to get your hands on that, you need to know that first. Too often people want to say, well, do I call you after I find a property? Well, do you know you can afford that property? Do you know you can get the financing of that property? Do you even know what it takes to finance that property? You're going to go through all this energy and all this time to search. You find the one you like. You're going to go through negotiations. You're going to go into contract and then call me. And if things don't work, look at all that time you just lost.
Yeah, real estate's all about the money.
It's 100% about the money. Yep. Right? So if you don't know yet, then you're literally wasting all this time unnecessarily. So we dig deep into it right out of the gate. So have you ever heard of the term underwriter?
Of course.
Okay. So an underwriter is usually talked to, or at least looks at a file about the third week of the deal.
Okay.
Right? You have a loan originator that does a pre-qual. They issue this pre-qual and they'll look at a person's application, credit, and maybe a pay stub. Maybe look at a bank statement. So, okay, yeah, you look like you can make this work. They'll give you a general idea of what you can do. Then you go out there and you hunt down a property, you go into contract. Then they say, okay, we need all this paperwork now to start this loan. I want your tax returns, I want your your updated pay stubs, your W-2s, your bank statement, K-1s if you own a business, all these things. They start sending all this information in.
So then technically we're saying some loan officers will give them a pre-qual of some sort, and they're shopping before they even
before it even sees an underwriter, right? Underwriters deeper in, because they work for a whole other department. They're elsewhere in the loan. They're not going to look at a deal until they see they want the appraisal in there. They want the insurance information in there. They want the title work in there. They want all the financials. Then they'll hand it in. Yeah. Well, then the underwriter looks at it and says, oh, you need this, 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 that. They come back with a massive list, right? So the loan officer's calling the people and says, oh, I got this jerk underwriter who wants all these things. So I decided to circumvent that whole process. So what we do is when somebody sends an application in, a member of my staff will review that application. They'll say, we need this list. They give a very comprehensive list. Now and again, I'll get a call from a client saying, you want all this stuff for a pre-qual? Yes. So I'm not going to waste my time or yours on something that's not going to close. Then when all that paperwork comes in, I hand it directly to an underwriter. Underwriters do my pre-quals, not me.
Ah, nice.
And so the underwriter, one of them who's running that team, that small team of underwriters, because these are only do the pre-quals. They don't do any of the end. I got other underwriters that do the end. The one who kind of runs all of it, she's been doing this since 1982.
Okay.
She has a master's degree, and she has been a regional underwriting manager for 5 years. That's who looks at this. She also oversees my product development.
So I know you just ran through a bunch of different types of paperwork. So the traditional investor, what are some of those key documents, key things that they might not even know that they have to get together, right? So what are some regular jargon, some terms, and some documents that they should definitely know about?
Well, 100% you're going to need your tax returns. Yep. Because we're going to need to know how your income is derived. And then anything that's associated with driving that tax return. So if you get K-1s from a business, 1099s, you have a W-2 employment, any of those things, anything that would show income or losses that would go onto the return to come up with what that bottom line is, we need to see. Because there's a lot of times people have joint returns, right? Yeah. Well, my joint returns say X amount of money is being made. Well, yeah, but by who? you have joint returns, money's coming in from two different people.
Yeah.
If only one person is trying to qualify, you can't use the other person's income, because what if something happens to the other person? Right? We have to go you standing on your own 2 feet. So what drives your income? So you have to separate all that out. So you need anything that has to do with your taxable documentation. We also have to look at your assets. Some of the assets I think is probably the greatest assets to have would be whole life policy.
Mm-hmm.
Got a whole life policy? That to me is the holy grail, in my opinion.
Okay.
You've got that. That we'll get into that here a little bit later. But whole life policy information, 401ks, IRAs, checking accounts, savings accounts, CDs, mutual funds, anything that you have assets in. It has to be your assets, of course. It can't be somebody else's assets that you have access to. Then you want any credit documentation. Anything has to do, we're going to pull a credit report. We're going to dive into that one. If there's anything that has to do with a liability, it was a negative thing, and you have documentation to show that it was definitely not your fault. Sometimes it had some medical reasons or whatever. We'll have to dig deep into that. But for the most part, it's pretty simple. It's really just documenting the information that we have. We will dive into it. We'll tell you what we need. You'll send it over. We'll do what a normal lender does in 3 weeks in 72 hours.
Wow, that's amazing, man. So